They built a glass paradise way too high, then the bubble pop. The silent sound of foreclosure signs are all over town. I got a bad loan, a promise they believe. Now the dream is over, they're feeling deceived. I watch from the sidelines, patient and cool, playing by a different set of rules. All I wanna do is, and I wanna do is take the window. All I wanna do is, and I'll cash up hard and watch the funds grow. This is straight up capitalism, chick, chick, boom. Sweeping up the pieces with the concrete boom. When I do, when I do, when I do. Get a call from my contact, a whisper on the phone. Another empty unit, the speculator is gone. He says a shame with a crocodile tears. He sells me their future for a fraction of last year. The paperwork's easy, a cash only deal. That heartbreak and panic is my next big steal. They get a cardboard box, I get the ocean view. It's nothing personal, it's just what I do. And I catch your body, take your condo. And I catch your body and watch the dance floor. This is straight up capitalism, chick, chick, boom. Sweeping up the pieces with the concrete broom. When I do, when I do, when I do. Some myself ask for a quick return. Some I rent out, let the lesson burn. They call it a crisis, I call it a sale. In this concrete jungle, the strongest prevail. No funny business, I am the business. They sold you a lead, now I'm the witness. Seek your condo. Watch the funds grow.
Happy Thursday, Miami. This is Condo Capitalism. This is a 1-hour conversation about what's going on in the condo market, especially as it's going to pertain to those units and those buildings that might be facing some risk. What is the big risk today for condo associations in South Florida? In fact, the entire state of Florida, it's insurance. Can condo associations get insurance? And if they do get it, how much is it going to cost? And what does that do to the maintenance fees? There's a large property management company called First Service Residential. They just came out with their second annual report. In the report, they were talking about in Miami-Dade County, if you're in a high-rise condo of 7 stories or higher, 20% of your maintenance fees are going towards insurance. If you're in Broward or Palm Beach County, 25%. So how do you make sense of the insurance industry? How do you know what's going on? Am I getting ripped off? Am I getting a deal? Well, we're going to answer that today. I'm Peter Zalewski. I'm a condo consultant. I'm an expert witness. I'm also the founder of Miami Condo Investing Club. This week's podcast, and remember, I do Condo Capitalism every Thursday at 4 o'clock live. In fact, I do podcasts every day of the work week at 4 o'clock live with different categories. Today, though, we're talking about condo insurance, and I got just the guy to kind of lay it all out, and I'm going to ask him the hard questions like, why are the insurance companies ripping people off? So if you're interested in that, stick around and enjoy the conversation. Let me go ahead and introduce our guest this week. No one else but Peter Romeo. Peter is a vice president over at Business Risk Advisors. Check out his website, which is BRA-LLC.com. And by the way, if you want to get a hold of him and you like the podcast, you dislike it, you want to get more information, send him an email at promeo, R-O-M-E-O, at BRA for Business Risk Advisors, -LLC.com. Whew, long way of saying, Peter Romeo, how are you doing, my friend? And happy winter buying season.
How you doing, Peter? Good. I'm glad we had the same name. Can't forget your name, which is great. So I'm doing well. You know, I'm staying very busy. It's right now it's budgeting season for condos. So for me personally, a lot of clientele that has their insurance renewing from now all the way until May or June. So really busy.
Nice.
Yeah.
So Peter, Just to give the audience rules of engagement, what I want to do is I want to hear a little bit about you. I want to hear a little bit about your experience. I want to hear about your firm, what kinds of services your firm offers, all of that. And then from there, we'll kind of start big picture, like a Google Earth, and then we'll start to drill down. The people who are going to be watching this podcast are going to have either an interest in condos, maybe they are board members, maybe they are lenders, maybe they're anybody. And people are trying to make sense of what's going on in the insurance industry. Every single time there is talk about the state of Florida eliminating property taxes, which is what Governor DeSantis is looking to do, try to get rid of property taxes. Everybody always says, they call in on the radio programs like on WLRN, and they say, listen, property taxes are what they are. Deal with the insurance. So insurance is a hot button issue. Although, from what I understand, prices are actually starting to come down right now, because a big hit was a few years back after the hurricanes, as well as that tragedy, which was the Champlain Tower South, which collapsed. Nearly 100 people died. A $1 billion settlement was paid out to the families of the victims, and effectively everything changed in South Florida, just like it did for the old timers who remember back in August of 1992 when Hurricane Andrew hit, and then the building codes all sort of changed. So that's our big picture, Peter. That's what I want to get into. But probably the best place to start is tell us a little about yourself. Tell us where you live and tell us where you came from.
Absolutely. Yeah. So I've been in the insurance industry for just over 11 or 12 years. Came from New York. I grew up in Long Island. I actually worked at a top 5 insurance agency in the country called Alliance Insurance. Was over there for around 5 or 6 years. I specialized in financial institutions and condo associations, believe it or not. I had some clientele down in South Florida, but also had clientele in New York City as well. Around 2020, after the pandemic, give or take during the pandemic, I transitioned over. I wanted to eventually move to South Florida. I like the weather down here. I like the insurance down here. And when I started focusing specifically on Florida condos, I saw it was an opportunity to really help people, associations, and board members, because many of them are on fixed incomes, right? A lot of these unit owners are on fixed incomes. So when it comes to the insurance, over 40, 50% of their total budget is allocated towards insurance, right? So for me, it was a no-brainer. Came down here, left Alliance Insurance, came to Business Risk Advisors, and now I'm just strictly doing condo insurance. Business Risk Advisors, we write in all 50 states. We specialize almost like a white glove. We try to call it like a white glove service for condo associations, specifically in the state of Florida. However, we do have a separate division that does focus on the residences, which is actually considered like partial hotel and also partial condo as well. So we write that across the U.S., but me personally, I just focus on condos down here in the state of Florida. So.
And Peter, you're doing everything from garden style. So, and anybody, I don't know where the audience is. So these are like 1- and 2-story buildings. They typically don't have an elevator, all the way up to high rises where you got to get in that elevator. You go up, you kind of do what you do. You're buying based on the view and the height and the balcony. So can you kind of compare and contrast in terms of the garden style, which I would say, generally speaking, are going to be older ones or they're going to be Western suburbs, and the high rises, because real estate constraints, as well as the cost of dirt, many developers will go vertical. Could you kind of talk about the differences in terms of the garden style versus the high rise? And is there a tipping point? Engineers have told me when you're doing construction or if you're doing maintenance on a building, as it pertains to mechanical, electrical, plumbing, MEP, takes more time foundation wise, as well as the equipment to get the water from, let's say, below the street level all the way up to the 50th floor or 60th floor or whatever the case may be. So can you kind of lay out the different scenarios, and then maybe just for kicks, give us one in the middle. Let's call it like a mid-rise. Call it, I don't know, 8 stories or something like that.
Right. So that's a very good question. Very good interpretation between garden style and high rises. So garden style, we, as an insurance agent, we usually just typically call that, multiple buildings that are between 1 and 2 stories typically. Once you hit that 3-story mark, and that's what you mentioned, as soon as a condo is 3 stories or more, they're actually now required to have two things done, which I'm sure a lot of the audience knows if they live in a condo that's 3 stories or above. The first thing is called the SIRS report, structural integrity reserve study. Okay. And the second thing is called the milestone inspection. And to just simplify it, like a milestone inspection is realistically like a 40-year inspection or a 50-year inspection. They just do an inspection to make sure that it's safe to live in now, right? structural integrity reserve study, they look at different components of the building to make sure that it's financial, like you could financially afford any kind of maintenances that go down, like if you need a new roof or you need concrete restoration, etc. So I would say the main difference between the garden style and the towers are those two reports. Now, there's a lot of hurdles when you live well, if you have to get a milestone inspection done and you have to get a structural integrity reserve study done, the insurance companies, when we go to try to get quotes for them, they always ask, do you have a structural integrity reserve study done? Do you have a milestone inspection done? Whereas the garden style condos, they don't have to ask that, right? So it's much easier to insure, I think personally, to insure a garden style condo versus a high rise. Now, there's a lot of ins and outs in high rises that, like you mentioned before, if from a structural engineering perspective, think about it. A high rise is one building, right? 50 stories up. They have to check everything. They have to make sure everything's good. God forbid, if one pipe breaks, it leaks down to everywhere, right? In a garden style condo, there's multiple buildings. And the same thing with mid-rise too. Even a garden style that's over 3 stories, it's multiple buildings. So God forbid, if there's any kind of damage that happens to one building in a garden style condo, it could be fixed relatively easier than a whole entire building where, God forbid, something has to get shut down, et cetera. It's a nightmare. So, those are mainly the two differences that I've seen recently between the two. And just from an insurance perspective, there's deductibles, there's per building deductibles from a garden style, which makes it easier for the garden styles, has a lower deductible. When it comes to the high rises, if you have a 5% deductible, it's the value of the whole entire building versus a garden style condo. The deductible is per building, right? Where the deductible is significantly lower for a hurricane deductible. So just some little nuances and differences there.
Yeah. Interesting. Just a little bit of history for the audience. So, state of Florida, down in Miami-Dade County in the 70s, I think it was 75, 72, something like that. The feds are leasing office space in Miami-Dade County, greater downtown Miami. The building collapses. The county says, oh, wow, we might actually have an issue here because the conditions down here in Miami are a little bit different than elsewhere. So what does the county do? They adopt something called a 40-year recertification. Because of an experience, they adopt this policy. Because of this policy now in Miami-Dade County, and I think it was Broward County only, but because of that, they go ahead and they adopt this, and now we suddenly get this 40-year recertification that is a requirement. And I would argue that Miami-Dade County, and I think Broward does the 40-year recertification to a certain extent, but I would say that these two counties, unlike the rest of the state, which is 67 counties, they were kind of ahead of the curve in terms of studying this stuff, where I don't think that it used to go on throughout the rest of the state of Florida. Do you know about that? Do you have any insight on that? I would imagine you to know it, but that 40-year recertification, which really kind of began in Dade County, or maybe it didn't. Is there any kind of details you can add to that?
Yeah, just the 40-year recertifications I've seen. Can you hear me okay, Peter?
Yep,
okay,
I hear
sorry,
you.
I had a call before and I exited out. So in terms of like a 40 or 50-year recertification, I've seen insurance companies actually not be able to provide insurance because of a failed 40-year or 50-year recertification, whether that's, electrical. A lot of times I've seen where condos will fail a 40-year recertification because of electrical, any kind of Zinco or Federal Pacific breakers. The insurance companies do not like them. So what has to happen is I've seen some condos, they can't get insurance. So what do? The point of a 40-year or 50-year recertification, which is very similar to a milestone inspection, is to make sure that the building, is safe for the residents to live in, right? And if there's a failed inspection, why would the insurance company want to insure them, right? So I understand why the state did it, specifically Miami-Dade to start it, and I understand why these milestone inspections are in place, even though it's not a lot of people that live in condos, especially 3 stories or above. They're not huge fans of it, from what I hear. But I understand why.
No, hold on. Don't give away too much. We got to lead everybody along. Yes. We got to set the scene. I'm going to hold out on the key questions at the end because I want to make sure that people stick around because they're going to be interested. And by the way, if you are interested or if you want to send an email to tell Peter he doesn't know what the hell he's talking about or you agree with him, send him an email at promeo@ BRA-LLC.com. Peter, another big picture sort of question. If I go to 7-Eleven, I buy a bottle of water, it's going to cost me $1.50.
Yep.
Let's say I go to Costco and I buy a package of water, it's going to be cheaper per bottle. I'm wondering, is garden style apartments where there's fewer, they tend to be spread out over space. They don't have elevators. They got a swimming pool. There's plenty of parking versus a high rise, which is probably going to have 300 to 500 units. Do you get that value if you live in a high rise insurance, let's say price per foot or price per, lack of a better word, price per ounce? Is it the same type of correlation like I would do if I bought a bottle of water at 7-Eleven or if I bought a whole case at Costco?
Oh, that's a great question, Peter. It's like comparing apples and oranges. Okay. And I'll tell you why. So typically 80 or 90% of the garden style condos that aren't built obviously after depends on what year they're built, but typically there's 6 types of construction type. Okay. One is frame construction, which is mostly wood, and it goes all the way up to fire resistant, which is the 6th one, okay, which is made of concrete and steel. So there's 6 in between. It's like frame, joist and masonry non-combustible, then modified fire resistant and fire resisted. So a lot of the towers, most of them are called fire resistive, okay, which is the best superior construction type. So in the eyes of the insurance company, they're the best to insure, meaning the odds of a fire happening, any kind of windstorm damage, is very low. Whereas a garden style condo is made up of usually frame and joisted masonry. So the odds of something happening are much higher in the event of a hurricane or any kind of peril, which is fire damage, lightning, water damage, etc. So I would say that the price per square foot is always higher in fire resistive construction because the materials are more expensive, just simply put, right? But the price per square foot in a garden style condo is actually lower. So we always look at price per square foot when it comes to replacement cost values. So, you have, just to give you kind of a raw example, it's kind of tough to explain without being in person, but, you see one tower, right? I don't know. It's 25 stories in Fort Lauderdale. That building might be worth, and it's called your replacement cost value, or your total insurable value is like $50 million, right? And it's 300 units. Okay. But you can have a garden style condo that's 500 units. Okay. And it's worth the same amount, meaning that the total insurable value is the same thing. It's $50 million, even though it's much bigger and it has more units. The price per square foot is going to be lower in a garden style condo versus a high rise or a fire resistant building. So, the insurance companies, once you're fire resistive, so I don't want to give too much away. So,
don't give everything away yet. Yeah. Don't give it away.
I could talk about insurance for hours. Listen, I personally insure over 50 condos at least in the state of Florida, and I speak in front of boards, unit owners, all day, every day. So this is I could talk about this for hours. So I like this kind of stuff.
That's awesome.
Yeah.
And again, for the audience, just to kind of so everybody's on the same page. Peter, the way I interpret a structural integrity reserve study, or SIRS, and a milestone inspection, the way I sort of describe it to people, and this is my take on it, it might be crude, and I apologize in advance. A structural integrity reserve study, which has to be done every 10 years, basically is like going in for a checkup once a year at the doctor. A milestone inspection, which is like a deep dive, really get in there and understand it. It's like getting a colonoscopy.
Yep.
This is the way I do it. You're not looking forward to the milestone, the SIRS. Okay, you got to do it. It's rules of engagement. And more importantly, if you're a unit owner, it's going to lay out, because you're bringing in a licensed architect, a licensed engineer, or a reserve specialist, but whatever that is. I guess it's an apprentice or something who kind of learned the business. But basically, the SIRS, it's giving you a roadmap. This is what's likely to happen next 10 years. This is the shelf life of the roof. This is the structure, the concrete. This is all that type of stuff. And they're putting a number on it. Because remember, everybody, structural integrity is like, is the building safe? Reserve is how much money you got to collect. What's it going to cost? So they kind of lay out the roadmap for that. Now, the milestone inspection, that's when they go in there and they say, okay, now we need to get serious and we need to really kind of figure out what's going on. And it's preventative. Am I getting anything wrong about that?
No, you are spot on. I mean, you said it